Ladies and gentlemen, good day and welcome to the Alembic Pharmaceuticals Limited Q3 FY21 earnings conference call. We have with us today from the management, Mr. Pranav Amin, Managing Director, Mr. Shaunak Amin, Managing Director, Mr. R.K. Baheti, Director Finance and CFO, Mr. Mitanshu Shah, Head Finance, Mr. Jishal Shah, Head Strategy, and Mr. Ajay Kumar Desai, Senior Vice President Finance. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. R.K. Baheti, Director, Finance and CFO. Thank you, and over to you, sir.
Thank you very much. Good evening, everyone. Thank you all for joining the third quarter results conference call. I'm sure you would have received the results by now. However, let me briefly take you through the numbers for the quarter ended, 9 months ended, 31st March 2020. 31st December 2020. Let me begin with financials first. During the quarter, our revenue grew by 9% to rupees 1,314 crores. Ebitda grew by 21% to 401 crores, which is 31% of sales. Profit before tax went up by 24% to 352 crores, and profit after tax went up by 25% to 293 crores. I'm happy to inform you that for the first time, Ryzen, our associate company, after recouping all the work in progress, CWIP, posted a profit for the first time, and our share of profit of 26 crore is included in the above numbers. EPS for the quarter is 14.88 per share. This is for the quarter versus 12.42 in the corresponding quarter in the previous year. This year quarter, of course, you know the capital is enhanced. So this is on enhanced capital, 14.88. During the 9 months YTD December, our total revenue grew by 21% to 4,113 crores. Ebitda grew by 40% to 1,272 crores, which is 31% of the sales again. And profit after tax went up by 52% to 1126 crores, 1,126 crores. Profit after tax went up by 53% to 927 crores. EPS for the 9 months, again on the expanded capital, is 48 rupees plus per share on weighted average basis versus 32 rupee per share on the old capital in the corresponding 9 months in the previous year. Coming to the capex for the quarter is 197 crores. Cumulatively for 9 months is 509 crores. And cumulative capex for the ongoing projects, the new projects which are still under CWIP, yet to go for production, is about 1,700 crores. Our investments in Aleor is about 60 crores for the quarter, and 9 months is 125 crores. Cumulative funding to Aleor is 800 crores. As we have reported last quarter, net borrowing is pretty low now at around 300 crore. Gross borrowing is 600 crore. Net debt equity is marginal at 0.08. I will now hand over the discussion to Pranav for his presentation on international business.
Thank you, Mr. Baheti. We had another decent quarter in the international business, largely driven by the API and ROW markets. The R&D expense was 148 crores, approximately 11% of sales. We filed 1 ANDA during the quarter. We also received 8 approvals in the quarter, including 2 tentative. We cumulatively have 137 ANDA approvals, which includes 18 tentative approvals. During the quarter, we launched 7 products, including asenapine and timolol, which were interesting opportunities. We plan to launch around 5 to 6 products in the fourth quarter as well. The international formulations business grew by 3% to 683 crores for the quarter and 27% to 2,233 crores for 9 months. US generics degrew by 1% to 512 crores for the quarter and grew 21% to rupees 1689 crores for the 9 months. Ex-USA generics continue to grow by 14% to 171 crores for the quarter and by almost 50% to 544 crores for the 9 months. API business also grew by 21% to 214 crores in the quarter and by 34% to 741 crores for the 9 months. I now invite Shaunak to share some insights on the India branded business.
Good afternoon, everyone. So the India branded business, on the back of some recovery in the market along with a better operational performance, we did manage to show a 14% growth for the quarter and a 5% growth culmination for 9 months of the financial year. Largely the growth in this quarter was driven by our focused specialty segments, which is 15% growth in cardiology, 19% growth in gynecology, 19% growth in gastro, and 30% growth in diabetology, which is a continuation of the performance that we saw in Q2 also. In antibiotics, on a flat market, we did manage to clock in a positive 3% growth on the antibiotic side, and on the cough and cold side, the market still continues to underperform, and we continue to underperform along with the market in Q3. In terms of new launches, we had 2 important launches in Q3, which was dapagliflozin as well as rivaroxaban in the cardiology space, cardiodiabetes space, which we feel going forward will give us a strong traction in sales in the coming years. Within the portfolio, like I emphasized last quarter, the key focus brands which were the ones which largely were the ones that were able to drive this growth, and going forward we expect this momentum to continue. On the acute side of things, especially cough and cold, we're eagerly awaiting some normalization of the market, which we expect with the vaccine rollout to happen in Q4. On the back of that, we're extremely confident that the kind of performance we've been able to pick up in the specialty side of things, we'll be able to demonstrate those in cough and cold as well as our antibiotics portfolio once market reaches to more normal levels in terms of overall growth numbers month on month. So that's all. I'd like to open the floor for Q&A, please.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. The first question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the opportunity. So my question is on India business part. Just wanted to understand that better. So in most of the focus therapies, you have achieved good growth. So can you more discuss there, like what is helping us? New launch is of course one big driver, but what other factors are leading to this kind of very strong growth for India market? That's my first question.
Yeah, so on the India market, the growth is more largely at the moment driven majority by the old products in our portfolio. The new launches are too new, and as you know, in India it takes a couple of years in the cardiodiabetes or in the specialty space for the brands to really pick up large momentum. So yes, the new brands have contributed in a small way, but largely it's the old brands. What has helped in driving this growth is I think the last 2 years of reorganizing a lot of our trade practices along with a lot of refocus and reorganizing our portfolio. I think like I've been saying since Q4 last financial year, that, our business has come alive. Unfortunately, I think it was the pandemic which kind of, didn't allow us to show it. And now as things are returning to normal, we're starting to see the benefits of all the restructuring exercises we've done in the India portfolio, especially on the specialty side.
Okay, so still the growth is largely driven by a pickup in the older brand, as you mentioned, and the contribution from new launches will take some time to reflect in the numbers, right?
To contribute in a large way to the growth, yes, it will take few quarters still.
Okay, and last quarter we had some benefits for azithromycin demand pickup. So assume that is still continuing for this quarter, right?
No, so this quarter the azithromycin benefit has tapered down, and if I could give you an overall number versus a degrowth of the overall antibiotic market, we could show a plus 3% growth on our antibiotic portfolio. Obviously, a large part of that was contributed to azithromycin growth, but we definitely see a more easing up of growth on the azithromycin side at the back end of Q3, which we're seeing continuing into Q4.
Okay, and my second question is on the cost part. So on India business, how much of cost is back to pre-pandemic level? Because other operating costs, I think, despite pickup in operations, we saw sequential decline, right? So,
as far as cost is concerned, both the field activities now are almost at pre-COVID level. The customer meeting and meeting in the field is full swing. Promo cost is back to normal. So we are back to normal almost.
So this second difference between third quarter and second quarter, we should understand that large difference is coming due to lumpiness in the R&D expense.
So that's a consolidated number which factors a lot. Like in Q2 we had a larger R&D expense, which is little lower this time. But R&D is dependent on a lot of moving factors. But India business expenses are more or less in now line.
Sure, thank you. I have more questions. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Tushar from Motilal Oswal. Please go ahead.
Am I audible?
Yes, sir.
Yes.
Just on the US business side.
Excuse me, this is the operator. I'm sorry to interrupt, Mr. Tushar. Your voice is feeble. We can't hear you.
Is it
Maybe
clear now?
request you to use your handset, please.
Is it better now?
Yes, we can hear you now.
Yeah, just on the US side, I would like to understand, given that there would be some delay in the inspection of the new facilities. So, considering your earlier guidance of 450 crore expenses coming in FY22, will that get pushed? That is my first question.
Yeah, so as far as the expenses are concerned, the facility that we've done maximum filings from F3, that I think we've done about 5 to 7 filings already. There's some products which are in shortage. We've been discussing with the FDA. I'm hopeful that they will be here within the next quarter or two. But listen, let's see how it goes. No one knows what's happening in this world. But I'm hopeful that within the next 6 months they should be here for an inspection. So the expenses will start hitting once we commercialize sales from that plant.
Got you. And on the filing side, given that these new facilities, the filing pace was supposed to pick up. So when do we see that happening?
So we've already started, F4 is an extension of, not extension, but it's an oral solid, so we're not doing any new filings per se from F4. That will be the existing facility. We will move some site transfer products over there for additional capacity. In terms of F2, which is our oncology block, we've already done some filings. The injectables we will do, the injectables we will do by the end of this year. And the injectable block, the general injectable, we've already done 5 to 7 filings, and that's when the FDA has given us a date as well, which has of course got pushed back because of COVID.
Got it. Thanks. That's it from my side.
Thank you.
Thank you. The next question is from the line of Charulata Gaidani from Dalal & Broacha. Please go ahead. Charulata Gaidani from Dalal & Broacha, your line is unmuted. Please go ahead with the question.
Yeah. Congrats on the good set of numbers. My query is if you could throw some more insights into the India business, because India business growth has come across specialty as well as acute when acute has been doing well across the industry. There is a 9% growth in acute and also in the animal health category. So can we consider this as a new quarterly base, and how do you see this going forward?
Could you just repeat your question? The voice was breaking. Have you heard this?
Yeah. So, you are right, Charulata. India business has done well, and I think for last few quarters we have been explaining our strategy to revamp the India business, make it more sustainable, make it more profitable, and some of these efforts seems to be paying off. Going forward, yeah, we remain quite confident of doing better than the market in most segments of our focus.
But the reason of this growth, is it that you have widened the reach, or have you taken an increase in prices?
No, it's both. Actually, it's a recovery in the market and our operational efficiencies. Both have combined to take us to this growth number. Price increases and all those are, part of life for any pharma company. There are a lot of restrictions on price increases. We do wherever it is allowed by the law and the competition. But that's not an important factor. The important factor is the operational efficiencies and some recovery, of course, in the overall market.
Right. And my second question pertains to the U.S. U.S. has come down to around $17 million in the quarter. So do you see this going down further, or you think this is the bottom?
So the U.S. business, as you know, our last 8 quarters or so have been quite exceptional in the U.S. business. This was largely, as the market knows, due to various reasons such as sartans and shortages.
Excuse me, this is the operator. Participants, the line for the management has dropped. We request you all to please stay connected while we reconnect the management. Ladies and gentlemen, thank you for patiently waiting. The line is reconnected. So you may go ahead.
Yeah, thank you. So yes, the U.S. business, as I was saying, the last 8 quarters for the U.S. business have been quite exceptional. As everyone knows, there was a lot of shortages in the market and a lot of disruptions which caused this fantastic growth for us. So quarter on quarter is tough to say. There's been some correction, as I mentioned in the last couple of calls, that the markets are stabilizing with the sartans. Moving forward, I don't want to say quarter on quarter, but we still stick to our guidance for 2-3 years. We expect to be by FY24 closer to the 400 odd million in terms of US sales.
Okay. Yeah. Thanks. All the best.
Thank you. The next question is from the line of Vishal Baraya from Aviva Insurance. Please go ahead.
Hi. Pranav, what would have caused a lower growth for the quarter in the US? Would it be pricing pressure on sartans or loss of market share, or something that you can share?
Yeah. So sartans is a big part of it. So yes, there is incremental competition in sartans. That is one of the reasons, and we lost some accounts. We didn't want to bid at the prices that were there, so we let go of some accounts on the sartans. That is predominantly the reason. As you know, as I mentioned, last 8 quarters, there have been a lot of disruptions in the market, and there were a lot of opportunities, very high-priced opportunities, which are very less now. But listen, it's a U.S. market. You keep finding opportunities, so let's see how it goes.
Okay. So incrementally, as we see ahead in 4Q, so should it be similar to what we saw in 4Q, or should we see incremental deterioration? Any perspectives for the coming 2-3 quarters?
It's very tough to give a guidance, but as I said, there's a lot of disruptions. If some disruptions happen, then it could be better. We've just recently launched some new products in December, so it's really a matter of what we get. I expect it to be around similar. What I said, around about 70 odd million that I've been guiding for.
Okay. You were planning to launch some limited competition products in the US.
We launched 2 in December, actually 3 in December. One was a Cenapine, which was a day one launch. There were 3 other people in the market. The other one was a Timolol, where the sole exclusivity that we've got on that. So both are interesting opportunities. Apart from that, we also launched Tavabarol, which is a derm product, which is an interesting product, as well as Latisse, the Bimatibrast.
Okay. So overall, if you see the pricing pressure in US, like for the last first half of this financial year, we saw that the pricing pressure had reduced to low single digit. So does that scenario continue or overall for the US business?
So as I mentioned in the last call, we're seeing a lot more people enter the market again. So there's 2 aspects of it. One is the disruptions that you see due to shortages. That has become less. So this does not give you scope for a higher price one-time buys, what we saw for the last 8 quarters. Whereas on the sartans, it's relatively stable. So I'm not as worried about it. Going forward, it's relatively more stable. So it'll be easier to predict in the next couple of quarters how it's going to move.
Okay. Just if I got you right, the overall scenario seems to be still stable. Would we have
overall scenario, our long term, what we expect for the next 2 years or so, I'm pretty confident. I'm still very bullish on the US market. Our facilities are ready. We're awaiting inspection, especially F3, the injectable one, where we already filed about 5-7 products. So I'm still quite bullish on the US market.
Right. And just coming to the non-US market, the growth this quarter would have been driven still by Europe because of the serialization issues getting resolved, or would have been largely the new entries like South Africa ramping up in Brazil?
So it's across the territories. The 3 main territories that we are part of is Europe, Canada, Australia. And I think all 3 territories we saw could focus on the supplies, and there was growth across the territories.
Okay. So, and just one last question on the API side. The profitability on the API business continues to be as good as it was in 1H?
Yeah. So the first half we saw a lot more opportunities in API. The profitability still remains to stay good, for us. As I've mentioned many times that we have always been more of a premium kind of a player in APIs, and we only focus on the regulated markets per se. So pricing has been fine. Having said that, after the first half of the year where there were a lot of disruptions from China, that has become less, and I think Chinese supplies are back in the market.
Okay. And the pricing outlook for API, the pricing would have also reduced a bit because now the Chinese suppliers are back?
Not for us. We're not seeing that.
Okay. So profitability for you would continue to still be relatively better?
Yeah, so far, yes.
All right. Fair enough. I'll come back and with you for more questions.
Thank you. The next question is from the line of Rasmi Sancheti from InCred Research. Please go ahead.
Yeah, thanks for the opportunity. Most of the questions have been answered. Just 2 things. On debt, current gross borrowing stands at 600 crores. So what is the outlook on that? Will there be a major repayment in FY22 also, or will it remain at the same level?
So the debt consists of largely the NCD, which will fall due in next year 22-23 and will be paid in 22-23.
Sir, how much would it come down?
So in next year it doesn't come down. It will come down by 100 crores.
Okay, in FY22. And sir, in FY23?
Yeah, it gets repaid, fully.
Completely. Okay. And sir, on R&D part, in the earlier part of the year, you said that, R&D would be roughly around 700 crores. and I think in the 9 months we have done around 475 crores. So is it something that, we stick to our guidance, or we believe that, it would be lower than 700 crores?
So, you're right. I think at the start of the year we had said 700. But as you know, first quarter was a little bit of a washout or a little lower R&D activity due to the lockdowns and stuff like that. So I think we will end up at about 630 to 650 crores or so for the year.
Okay, sir. And sir, lastly on India business, if you could help us understand that, whether there were any new launches. I mean, how many launches have we done in 9 months in both specialty and the acute segment?
In the last 5 months, we have launched one product in the acute side, and we've launched 2 new products on the specialty side. We launched bilastine, which is an antihistamine product in the acute side of business, and we've launched dapagliflozin in the cardio-diabetes space, along with rivaroxaban also in the cardio-diabetes space.
Okay, sir. All right. Thank you.
Thank you. The next question is from the line of Anmol Ganju from JM Financial. Please go ahead.
Yeah, hi. Thank you. Thanks for taking my question. A couple of questions. One is that for the new launches that we had this quarter in the US, a couple of interesting opportunities that you referred to. For what period during the quarter did we get the full benefit of those launches? Were they?
You are speaking about the Indian launches or US?
Yes. They were launched in December itself, and I think in the latter half of December. So I think we only saw about 2-3 weeks of sales at the most.
Okay. In that case, given that we've had fairly strong growth even in India, which is a higher gross margin contributor, the sequential decline in margins, although still healthy, points to a fairly grim pricing action sequentially. So is it fair to say that this quarter therefore now represents the normalized level of certain contribution, and incremental deterioration for this piece, which we've been worried about for the last couple of quarters, is hard to conceive?
So, I really do not understand, because our margins have been pretty good and have been consistent on, a few basis points here or there doesn't really matter, but the GC continues to be at around 75%. The Ebitda continues to be at around 30%, which is what we had. I understand that, Subhaiti, and full compliments to you for achieving that. What I'm trying to understand is that this quarter, therefore, given the deterioration we have seen in the sartan contribution, is it the new base going forward? Therefore, because I think purely sequentially, the pricing action on the sartan side and US seems to be not in line with the last 8-9 quarters. Something which we have been worried about given the sustainability. So that's what my question is. Yeah. So hopefully, in the foreseeable future, we should be able to retain our margins.
Okay. And the sartan contribution, therefore, this quarter is most likely the bottom, right?
Most likely is what? Sorry, I didn't hear that.
The bottom, the trough.
Yeah, I don't know if the trough or how much lower it can go, but I think, it is what it is, So moving forward, the contribution from sartans is lower than what it was in the first half of the year.
So basically, Pranav, what I'm trying to understand is the vulnerability of the US sales trajectory to any adverse competitive environment of the like that you referred to in your comments to the sartan picture. So I think you have reasonable confidence that is not the case, right?
Yeah. So as I mentioned earlier, somebody else asked, if you ask me about my moving forward, going to FY23, FY24, I think our internal estimates stay intact. We're still confident about the US market. As regards to sartans, also mentioned that the last 8 quarters, there have been a lot of disruptions in the market. So it's stabilized quite a bit, so it's a little easier to predict now because there were a lot of disruptions in the past, a lot of one-time buy opportunities across the board. So that's what caused in the past. But I think moving forward, I think it's settled for now, in my opinion.
Thank you so much, Pranav, and congratulations for yet again good quarter.
Thanks.
Thank you. The next question is from the line of Ranbir Singh from Sunidhi Securities. Please go ahead.
Yeah, thanks for taking my question. Sir, one question related to Aleor JV. So, if you could just give a detail of what status currently we have there. So, of the current approvals in this quarter, like 6 final approvals, how much was from Aleor? And are we making a break even at bottom line at this level?
So, for Aleor, we started the commercial, sales last year itself. You are aware about it. The sales in the overall context is very minuscule. We had couple of approvals in the current, basket of approvals for the quarter from Aleor basket as well, actually. Going ahead, when we have the critical basket, we have 30, 40 products approved, and, when we start selling that in the market, we'll kind of, see how the derma portfolio performs in the overall scheme of things. Right now, it is, it's a limited number at this point in time.
So, are we making a losses there, and what would be the quantum of loss currently we are making on quarterly basis?
So there is a loss at this moment, but because in a line-by-line consolidation, it gets consolidated, you can get a feel of the losses based on the minority interest which is getting disclosed in the annual report, in the financial results.
Okay, fine. Okay, and secondly, you see in presentation we have one injectable approved. So, is this a tentative approval or final approval?
I don't think we have an injectable approved as yet. If it is, then it's a tentative. It won't be a commercialized.
Okay, and so this is from F3 facility, right?
It is from a CMO.
It is this. Yeah.
Yeah, it is from a CMO. We haven't launched that yet. Right.
Okay, fine. Yeah, that's all from my side. Thank you.
Thanks.
Thank you. The next question is from the line of Abhishek Sharma from Jefferies. Please go ahead.
Thank you for taking my question. Sir, I had a question on Amlodipine. Given that we are heading into PDUFA date for monotherapy for 2 indications with good data this year, what kind of milestone and royalty can we expect for Ryzen and thereby for Alembic in FY22?
So, I wish I had the answer. That's a difficult question. The product is already out-licensed to TGTX, so they will be doing the marketing. I'm entitled to receive a high single-digit royalty on sales. So depending on the approval time and how they launch and what kind of market share they capture, the royalty will be dependent on that. Difficult for me to predict, but we are pretty hopeful of a good number.
And the milestone?
So milestone also, I think once the product is launched, we would be eligible for some more milestones.
And nothing on approval?
Now approval and launch will be almost simultaneous. So yes, on launch now, nothing on approval.
Understood, sir. Thank you, sir.
Thank you. The next question is from the line of Gagan Thareja from Kotak. Please go ahead.
Yeah. Hello. Am I audible?
Yeah.
Yeah. Good evening. Thanks for letting me ask the questions. My first question is around your India piece. If you could give a ballpark idea of the contribution of sales from anti-infectives, gastro, and cough and cold for Alembic.
So our numbers are given in the table in the investor presentation, which is part of our.
Yeah, but roughly if you look at it, active to specialty is 40-60.
Okay. Thanks. And you've launched Dapagliflozin and Rivaroxaban. These are products quite a few others would have launched as well. These having gone off patent, you are trying to push through into the chronic therapies and building up there. But that's a strategy that I think a lot of your peers would also be following. Given that situation, how do you differentiate and manage to maintain the growth that we've seen in this quarter for the India piece?
Yeah, so first and foremost, I don't think this is a one-off growth quarter, because if you see, even in Q2 we had a 16% growth in the cardio business. Gastro grew by 16% in Q2, and again in Q3 it continued, and we see this trend based on numbers in the market. In regards to differentiation, I think the question is far more complicated. I think we can have a separate call if required to discuss it in detail. But I think if I start, I think there are too many things we can talk about differentiation in terms of competitive peers. In terms of the new launches, I think we're extremely confident that we will be able to take good market share in all the new cardio-diabetes launches. Partly this is based on the fact that we've seen a lot of strong traction from our customers. We believe in our strategy, and we feel we've done good justice to the launch to drive it. So far what we're seeing is, I think we're set up well to take good advantage of this of all the new launches, despite the competition in that space.
The second question is around the QIP. You've been indicating that you've gone through a period of very heavy capacity building, which will now trail out, and therefore I would presume that you would be positioned for a very good, healthy free cash flow generation, which could have been used for the debt repayment, and therefore I was wondering, what was the thought process for the QIP, given that you would get into a strong FCF generation mode already?
Sure. So I think a lot of discussions had happened in October, because the QIP was in August, and in October results call there was this issue was discussed in quite a detail. Just to briefly reiterate, we believe we still have a lot of growth opportunities, particularly in the international markets, and we'll continue to invest. So we have just taken a small pause. We wanted these facilities to be inspected, approved, new products rolled out, and we already have on our drawing board further expansion plans. So we believe that QIP will de-risk the entire balance sheet, and that will. So there is an element of business risk, and we didn't want to couple it with the financial risk, and that's always a prudent strategy. Alembic has always been a conservative organization. We have been very, very major on equity dilution, and we very consciously did it. That actually demonstrates our confidence in the international business.
Okay. Third question is around the US sales. If I got it correct, you've been pointing out that on an average 20 to 25 approvals is a possible base case scenario for you in US in the coming years, which would mean that your entire pending pipeline could get monetized in 3 to 4 years, and the size of that pipeline at 118 pending, I would presume, would be higher than the number of products you have in the market. Also, they would be better filings in terms of the quality, which would mean that you should be in a position to be 80% to a double of your current base by the time you monetize all of this. You've also indicated last quarter that by FY24 you could be 400 to 500, but now I think you're talking of around 400. Any reason for that?
No, I've always said it's very tough to say on the generic side. So when I say guidance, I'd say it's not a guidance per se. I said that companies at the similar phase that we were in with kind of filings and what they've done, what would be our internal target? Yeah, our internal target would still be 400 to 500 million, anywhere between that. So that doesn't change.
Lastly, sir, between NEIS and the new costs that you'll incur with the new plants coming in next year, what could be the sustainable sort of EBITDA margin profile for you?
So they will go hand in hand. Look, once we have and there can be a bit of time lag, but otherwise they'll go hand in hand. So once I have the new plants inspected, approved, the commercial production rolled out of that, yes, the overheads will start hitting the P&L, but so will be the revenue generated out of those plants. Now, I have always said that 30% on a larger sales volume is a ambitious EBITDA margin. It may come down a bit, but I think in absolute terms, the business will be significantly bigger at that time.
Okay. Thanks for answering my questions. That's all from my side.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, thank you. Mr. Baheti, one question on the India market. You mentioned that field force activity is fully back at pre-COVID levels. Just one question on the promotion spend as well. My understanding was that till the last quarter, I'm not very updated what's happened in this quarter. On the conferences side, at least for the doctors, everything was digital so far. So what's the update there? Is that still digital and that part is not yet back?
So we had, Shaunak had been saying consistently we had moved away from those CRM and those conference sponsoring activity a long time back. Most of our promo activities are now science-centric or in-clinic support-centric. So, and we had already taken a beating some time back due to that, but we thought that being compliant in letter and spirit is always going to be sustainable. So, that has not really impacted our P&L, if you ask me.
So would you say that your India level margins are now very similar to what you were doing at pre-COVID? They are not at elevated levels as were for the year set in the first 6 months of this year?
Also, now they are at pre-COVID levels.
Okay, sure. Thank you very much.
Thanks.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, sir. So on Mr. Baheti, is there any more, when you're looking at the capex plan for the next couple of years, how should we look at, should we think about our capex now?
So I think during our QIP or post-QIP interaction, I had already said that there are plans to add a couple of more injectable lines on F3 once we have this inspection and approvals in place. So we had created an infrastructure which is a little larger than what we have populated currently. We have populated 3 lines and it can take 2 to 3 more lines. We have already initiated the concept paper for installing 2 more lines going ahead.
Sir, so then what kind of maintenance?
In addition to that, we said we are already making more investments in API now that the government has come out with little liberal guidelines for granting environment and other approvals, and API had been underinvested, if I can say so, in last couple of years. We are stepping up our investments on API. So these 2 areas will take some investments going forward.
Sir, is there any amounts which are sort of earmarked towards these 2, towards API and injectable capex going forward?
So I think going forward, excluding the normal maintenance capex, we should be spending about 400 to 500 crores in next year and a half, 2 years.
So that's 400 500 crores each, right?
No, both together.
Across the injectable and the API business.
These 2, new initiatives. And then, there are about 250-300 crores of annual maintenance capex. That will continue. That includes R&D also.
So broadly speaking, about 1,000 crores of capex over the next 2 years, right, including maintenance and growth.
Yeah, you are right.
And sir, on the other emerging market businesses, and that sort of scaled up very nicely in this 9 months. In this, what is this business of? So how should we look at this business now incrementally going forward? Because this is now a reasonably sized business for us at about almost like 800 crores per annum, almost $100 million business, which is amongst the larger emerging market businesses amongst the peer group also.
So we are not, Nitin, we are not in emerging markets. These, what we call ROW markets are all regulated markets. The largest part of it is Europe and followed by Canada, Australia and so on.
Oh, okay. And this is largely a reflection of a US
how we look at it is India market, US and ex-US ROW, but all of them are regulated markets.
Oh, okay. So it's a likes of Canada and EU largely, those kind of markets.
Yeah.
Okay. Okay. Thank you, sir.
Thank you. The next question is from the line of Ayush Mittal from Mittal Analytics. Please go ahead.
Good afternoon, sir. Sir, in reference to your earlier update about the pending US FDA inspection for the new plants, I wanted to understand more about it. Like, if the inspection is to happen in a quarter, by when do you expect to get onto commercialization and perhaps attain optimum utilization?
So what will happen is because there are some products which are in shortage and which are waiting, there's no patent expiry on that. So those will get launched right away. So right after the inspection, I expect that as we get the go-ahead, they will give the ANDA approval as well. In terms of capacity utilization, full level, that will take a while because there's 3 lines and then we're going to add more lines as well. So that will take a while, but the plant will start contributing once we start commercializing these products.
Yeah, by optimum utilization, what I mean is that broadly good enough to cover the additional cost and of depreciation, manpower, and so many other things that have been pending to be expensed.
Very tough to predict that and say right now, and I can't really give a guidance on that. So I'm sorry.
And also, given COVID, is there you see that it is reasonable to expect this inspection to happen in a quarter or two, or there can be more delays? Are you seeing the USFDA inspect plants in these times?
So so far they're not inspecting, but we've been talking to them, and that's why I'm kind of hopeful that within the next 2 quarters they may come and inspect, because there's some products which are in shortage. But so far, the FDA hasn't been coming and inspecting.
Okay, and you plan to keep doing more filings till then?
Absolutely, yes.
Okay. So there's always one accounting issue that comes in respect to this expansion, that given that this approval has been so delayed, while our people are operating there, so shouldn't the company take a more prudent approach and charge off the operational expenses going forward, even before we get the full go-ahead from USFDA?
There are 2 aspects. One is, and both are related to accounting standard. So an accounting standard says that unless, you need to capitalize expenses till the commercial use is started. But you are aware that there is another standard which also requires company to test for impairment. And we and the auditors keep testing for impairment. And we still believe that the expenses which are loaded to the capitalization would still meet its financial goal. So we don't need any impairment. So I think, so far we are good.
No, because in the analyst community, there's a lot of concern because of this part, that as the plant has been put up, people are there, so there's definitely a lot of expenses and depreciation to things, machinery and everything happening just because it is out there, and you are doing filings and all those things. So isn't it prudent to have some charge to the P&L?
So Ayush, what we are doing is, we are not capitalizing every expense, okay? So all the trials that we do, machine trials we do, strictly which can be capitalized are the ones which are getting capitalized. The batches that we take, scale-up batches, the exhibit batches, all of those things we do are all getting expensed as R&D expenditure, okay? Now come to the administration portion of the entire plant actually. That is also getting expensed out. So the one which just gets capitalized is the core thing which, is useful for building the capacity, building the manufacturing facility. That is only getting capitalized, okay?
That's really good to know, Mitanshu, because if you go to several forums, I think there's a lot of debate on these issues. And if there's more clarity, if you can quantify on some numbers or something that we are expensing so much of expense which is towards new initiatives that will help analysts understand the company better. Just a feedback from my side.
Not getting into the numbers, conceptually we could talk about it and we can take this offline. I'll give you,
Sure.
greater flavor on this.
Okay. The second question I have is, Professor, you had mentioned, which other analysts had also asked earlier, that our ambition from the US business is to scale up to $400-500 million. And now as we are already at $70 million stable revenue, which is almost $280-300 million number, given that we are doing such a large capex towards the US, shouldn't our revenue 3-4 years down the line much higher? The aim should be much higher. If not, why?
No, it's a continuous process. So when
because you're building these facilities for a long period of time, right? So I'll explain. So the injectable facility that we built, that's got ophthalmic, it's got pre-filled syringes and vials. And we will keep building that as we go along. We'll keep adding more products to it. So the revenue will continue growing. I'm saying by FY24 we'll get to 400-500 million. But it won't stop there. It'll continue growing after that as well. And also there's a timeline, right? Because we're filing, let's say about 10 to 12 ANDAs that we expect to file from this new facility F3. From oncology, these are a little more back-ended in terms of approvals because they're all under patents. But most of them are all P4s from the oncology facility. So that's what the combination, and it's just the start, and then we'll of course keep ramping up from then onwards as well.
Yeah, so that's what I was trying to get, that as we are moving up the value chain where we are trying to do more complex things and injectables, onco, derma. So logically the pathway should be much higher, the aim should be much higher as we go forward, and we can do more of brownfield capex also if we get success.
Yeah, I mean the business has to keep growing, at some point you have to keep adding new products and more complex ones.
Okay. So one more question. With the R&D spend that we do today is quite high when we compare to any of our peers. Going forward, do you think this will continue to grow as a percentage, or will this taper down as our revenue scale up from new expansion that we are going to take?
We've got asked this question in the past as well. I think what will happen is, as an absolute amount, it will continue growing. But as a percentage, once these new facilities are commercialized, you'll start seeing it come down.
Okay. And will that come down to 7-8%? Is that a reasonable assumption?
I would say about 9 to 10% at least.
Okay. Thank you. All the best.
Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks for the question. The opportunity. I just wanted to know, you mentioned that we have launched Alembic. Can you let us know, what is the likely competition? Because I guess this is a product which is settled. So is there a difference in launches between other players?
So I think in the market from last, I remember there's about 3 other people apart from us. There's a authorized generic as well as 2 additional competitors in the market. It's a decent product which has got pushed back because of patent, but we've picked up some market share. We'll get more clarity in the next couple of months, how the market settles down.
Okay, and we have launched, what I understand is we have launched 2 dosage forms versus 3. So, I mean, does that 2 capture majority of the market, or how is it?
So there's 2 strengths of the formulation. Yes, that's majority of the market.
That's majority of the market. Okay. And any color on the other opportunity that you mentioned, Timolol gel, which are also
interesting opportunity. There's the innovator in the market as well as us, and I think Sandoz has a different form, but we have the sole exclusivity on it. And also, I believe there are supply shortages in the market. So it's looking interesting right now. Let's see next couple of months how it develops.
So are we the only player right now because of shortages?
So I think, I'm not sure. I think the innovator and Sandoz are supplying some quantities as well. Maybe not full quantities, but they're there in the market.
Oh, I see. Practically, we are the only generic. Okay. Thank you very much.
Thank you. The next question is from the line of Prakash from Axis. Please go ahead.
Yeah, good evening. Thanks for the opportunity. So my question is on R&D. I'm sorry I joined a little late, but what is the R&D spend we planning to do for fiscal 22 and 23? Any rough ballpark percentage of sales would help.
So in terms of absolute amount, somebody asked earlier, but I'll just repeat it since you were there. We'll end up the year below 650 crores for R&D because the first quarter was a little slower due to COVID. As regards to next year, I expect R&D to be anywhere between 700 to 750 crores.
Okay, and the momentum can continue given you have 200 plus products in the grid and you want to file 2025. Do you anticipate after it would taper a bit, or it would be at this level?
I think it'll be at this level itself. Absolute amount will gradually keep increasing because we will also start doing a little more specialty and more complex products. But as a percentage, once the new facilities are commercialized, we see revenue from them, they'll come down.
Perfect, great, thanks. And second one is on the the Ebitda margin. So as Mr. Baiti said that the expense side of promotions and all are back to normal pre-COVID levels, and you also mentioned that sartan has seen some competition. Despite that, we were able to do 27% kind of 27-28% kind of core margins ex other income. So just wanted to understand how sustainable are these given the both these tailwinds are in spite of that factoring in, you are able to do 27-28%. Are these sustainable for next year as well?
So we have not given the next year margin guidance. We have given an overall guidance. I think we should be good for that. I mean, you can do a bit of back calculation. The margins are okay, looks within reach.
Yeah, because if I do that calculation, then we are, either...
So if you factor the additional cost which will come with the new plants, come down a bit, yeah.
That is a function of post-inspection once you commercialize in the second half.
Absolutely. Otherwise it stays in this range.
Perfect, great. Thank you so much and all the best.
Thank you. The next question is from the line of Yash Gupta from Angel Broking. Please go ahead.
Good evening, sir. Thank you for the opportunity. My first question is on API, as the Chinese competition are back in the business. So how this pricing will be volatile in next couple of months?
So, as I've said historically in the past, that we don't really compete as much with the Chinese because we supply only to the regulated markets. And increasingly, even pre-COVID, there was we saw a lot of action of people having alternate sources from China in terms of the intermediates and the regulatory approvals and inspections. So having said that, yes, Chinese are back in the market. I think demand will slow a little bit compared to what it was, but I don't expect pricing to be hit as such.
Okay. Second question is on the sartan business. Can you give some sales number for the sartan in Q2 FY21? Q3
No, sorry. We don't give product-wise breakup of our sales.
Okay. So just want to understand whether the dip of or degrowth of 1% the US business is just because of the sartan, or is there any other things are also involved in this?
Just sartans.
Okay. Thank you.
Thank you. The next question is from the line of Abhishek Sharma from Jefferies. Please go ahead.
Thanks for the follow-up. Sir, just on sartans, wanted some color since you sell a basket of sartan products in the US. So is there any specific sartan which is getting impacted like olmesartan or valsartan, or is it all across? And secondly, is the pressure more on the price side or the volume side? Thank you.
Yeah, so I'll explain. Actually, it's very interesting because the last year, or for the last 8 quarters, what we've seen is we saw opportunities across the board in various sartans, which were short-term, some were short-term, some were long-term, some were one-time buys. So all that together is what led to a lot of growth. What we're seeing right now is there was one sartan particular where we let go of the business on pricing front. We didn't want to be in that. And that has caused some of the sales. The rest, I think, by and large, most of the sartans are stable or single-digit price decline kind of a thing. Or less than single-digit price decline, yeah.
And the volumes are intact on all other sartans, just that the pricing is...
Yeah, absolutely.
And if you would like to point out which sartan is it that where you have declined business? And
I don't want to say it, but if you see market shares, you will see which one it is.
Sure. Okay. Thanks.
Thank you. Ladies and gentlemen, we'll take the last question from the line of Ranbir Singh from Sunidhi Securities. Please go ahead. Mr. Singh, your line is unmuted. Please go ahead with the question.
Hello?
Yes, sir. We can hear you.
Yeah. My question is related to Ryzen Pharma. So in Ryzen Pharma this quarter we have income which is reflected there in results. So is this a part of milestone payment we are receiving, or this is a recurring type of profits we are gaining?
This is the milestone.
And also any we had a total deal size 150 million. So that is any visibility on it? Or what kind of milestone we can get in either in 21 or 22?
So I responded a bit earlier. Deal size always consists of a few things. One is the milestone on various reaching various obviously milestones. The second is royalty which you get on the sales, and the third is the manufacturing rights. So Ryzen deal consists of these three things. Going forward, milestone will be only on the product launch, and then subsequently the royalty and the manufacturing rights will kick in.
Okay. Got it. Okay, sir. Thank you and all the best. Yeah.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. R.K. Baheti for closing comments.
Thanks. Thanks everyone for attending the call. As always, it's very interesting and pleasure talking to all of you, the esteemed learned viewers. And we'll keep interacting. If any of you have any questions, please drop a mail to Ajay or Mitanshu. We'll be happy to respond to you. And look forward to see you again next quarter, hopefully in better situation. Thank you all. Good evening. Have a safe day. Safe rest of the year.
Thank you very much, sir. Ladies and gentlemen, on behalf of Alembic Pharmaceuticals Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.